Hey there, everybody. How's it going, Oluwaz Andy? Good to have you back for the fourth time in a row. Hello, Nuno from Holland. Nice to have you from all the way across the world. And hello, Creeper. How's it going, everybody? Welcome to the live stream. We got a new mic this time, so please let me know in the comments if that sounds all right or if this sounds all right. Well, let's go ahead and we'll give it a few minutes just for people to kind of line up and form in, and then we're going to get into our trading mindset lecture or presentation, and then we're going to do some chart and technical analysis. So if anybody has any requests, go ahead and drop those either right now or I'll check Discord in just a moment to see if there are any from the past week. And then at the very end, we're going to do some nice giveaways, and everybody's going to have a chance to win. Just make sure that you have either a Telegram or a Discord name. I'm going to go ahead and check for chart requests real quick, and then we're going to get into that presentation. So let's go ahead and yet again, if anybody has any chart requests and didn't drop them in Discord, you can actually drop them in chat right now, and I will add them to the very end of this live stream. Let's go ahead. All right, so no chart requests on Discord. If anybody has any all throughout this live stream, you can drop them. So let's go ahead and get started just for posterity's sake. Sorry, it's pretty early here. Haven't had any caffeine yet. But let's go ahead and get started with the trading mindset lecture. Again, you guys can, if you're watching this after the fact, if you're not watching this live, if you're not in a good time zone, it is currently 4 p.m. UTC, which is right around 11 a.m. Central Time. So Texas time, maybe noon New York time. So if you can calculate from there. But even if you can't watch live, these are recorded and they are uploaded onto YouTube. So let's go ahead and get started. How's it going, Lalit? How's it going, Lalit Pathak? I'm always trying to learn the right way to pronounce everybody's names. We have a very international crowd here, and it's tough. How's it going? Viewing from Tokyo, Japan. How's it going, Jay? Good to have you here. Let's go ahead and just jump straight into this presentation. So, quick disclaimer, this presentation is for educational purposes only and should not be interpreted as financial advice or an investment recommendation, and trade and invest at your own risk. Obviously, this is all educational, and we're going through a little bit of theory to get started. Let's go ahead and jump right in so that we can get to these giveaways and chart analysis at the end of the stream. So, first, volume. Volume provides us with vital information, not reflected by the price itself, and may be considered the second most important statistic on the chart. I'd say it's only second to price itself. So if you were to rank what's most important on your chart whenever you start viewing it, first is volume and first is price and second is volume. Don't want to get those mixed up. It may act as a confirmation for a trend or indication of trend strength, but you're not going to want to use it to hopefully try to predict a trend reversal or anything like that. It is a secondary indicator and secondary indication of price. So you can use it to confirm your price trend or confirm a reversal, confirm trend strength, but you shouldn't use it as kind of the first thing you look at, or you shouldn't say, all right, volume is turning up. Now we're most likely going to see a reversal, and then we use something else to confirm that. It's actually the other way around. Price, volume, and time. There you go. Awesome stuff. I'm glad I'm getting some good tenets, some good axioms from the comments as well. You guys are great. So some key principles of volume. Volume typically goes with the trend. Now, the next thing is very important. Filtering for irregularities. Rising prices are associated with net buy volume, and falling prices with net sell volume. Now, I think it's very important to note filtering for irregularities. So there's probably two ways that volume can go. Volume can be normal and volume can be abnormal. Most of the time, a majority of the time, remember, with trading, with strategical trading, we are working with probabilities. So what holds the majority is going to be the normality or the normal volume trends. But actually, every now and then, and more common than you would expect, we will see abnormalities, and there are kind of a litany of circumstances that you can see from volume, and which it just kind of looks funky. So we learn the normal situations first, but we don't get surprised and we don't get phased whenever we do see those abnormal situations. It's kind of the best we can do with volume, but really focus on the normalities, and your stop losses should account for any type of abnormalities. So circumstances may occur in which falling volume is occurred by or accompanied by rising prices, but this is usually limited to primary bear trend. So if we have a long-term, that's what primary means, long-term bear trend, and we actually do see falling volume accompanied by rising prices, you want to go ahead and check that long-term trend and make sure that it would be very abnormal if we saw that in a long-term bull trend, but in a long-term bear trend, that's one of those situations where you kind of flip. So volume should be compared to the most recent levels rather than historical levels. So if you are looking at volume on the bottom of your chart, don't look at your volume magnitude or how big your volume little sticks are compared to 4 years back, because it's going to be completely different. It's a completely different market cap. Compare it month over month rather than year over year. So look back to June if it's July, or look back to August if it's September. Don't look back to 2020 if it's 2023. So rising volume is associated with the completion of a price pattern with explosive volume to accompany drastic moves in both the breakout and breakdown direction. So this is kind of the most normal situation, is whenever we see either maybe it's a triangle, maybe it's a flag formation, any type of price pattern, as it comes to its completion, we should see rising volume or falling volume. There's that normal and abnormal situation, but it's typically associated, that rising volume is typically the rising volume is typically associated with the completion of a pattern. And then once we break out or break down from that pattern, if we see explosive price volume to accompany either that breakout or the breakdown, then we should see a stronger than usual breakout or breakdown. So we see rising volume, even if we see falling volume in both of the normal and abnormal situations. If we do see explosive breakout, if we do see explosive volume to accompany either that breakout or the breakdown, we should see an extended price move. So let's say you have a price pattern, it's a regular triangle formation, and you're measuring your magnitude maybe from the top to the bottom of your formation, and you say, all right, we are going to break out. We're seeing good confirmation towards the long side, and you want to measure for a good sell target. And usually you would measure just the magnitude of from the peak to the trough of your triangle formation. Maybe you want to extend that just a little bit if we see a ton of explosive breakout volume to accompany. Finally, volume trends may be projected in a similar format to price trends. And I can show that on the chart real quick. Basically, that's drawing trend lines for your volume itself. So let's move over to the chart to make a lot of this more clear, because I can understand that it's getting pretty... it's a lot easier just to show it on the chart. So this is what we have so far. Our volume is depicted on the very bottom, and I'm going to zoom in a ton so you guys can see that pretty well. Let's go ahead and zoom all the way in. We're currently on the 4-hour chart. Let's move out to the daily just so it's a little bit more straightforward and a little bit more intuitive. This is ADA to US dollar tether. Let's actually move over to Bitcoin, something a little bit more standard that should really reflect the most normality. But yet again, there are going to be situations on every single chart where we do see that abnormality, and we'll just need to kind of manipulate how we see our chart. So let's go ahead and take a look at a few different situations. A lot of the time we are going to see falling volume during these bull trends and then explosive volume to break out. So like we're seeing through here. So let me zoom in right through here to really get that. So this trend through here, bear trend, well, let's draw a trend line first. So this is just going to depict our general trend. This isn't for confirmation or anything. And for that reason, we can have our closes penetrate this line, because it's just to determine that this is a bear trend that we are seeing in general, lower highs and lower lows, even though it is drawn improperly for something like a confirmation or for actually trading. And then bull trend to follow. Again, we draw our trend line. There's not much we can draw in terms of higher highs or higher lows in terms of consistency. It's not very linear at all, but we can bring that down and see if there's anything there. Just a general bull trend. We don't actually need to link these higher highs or higher lows because we already see them. So we already see first high through here, second high, third high, fourth high, fifth high, even though it does kind of curve up. We see almost like a rounding top before we actually come back down and build up more volume to break out from that. So that's actually a very unique situation in which it's almost not correct to draw a straight trend line. It's actually almost curved. So Let's go ahead and analyze some of our volume from these situations. So just like how we're drawing trend lines for our price, we can also draw trend lines for volume. One of the big differences I like to say is that you can actually allow your candlesticks or your volume sticks to penetrate your trend lines, rather than, as we spoke about properly drawing trend lines in, I believe, 2 or 3 streams ago, we said that we usually do not want our candlesticks to penetrate our trend line, except for in the very rare situations. Actually, it's more common than you would expect, that we have a whipsaw or a false breakout like we see through here, or any type of tweezer top or tweezer bottom, like we don't see anything on the chart so far. But we don't have to worry about that at all. We don't have to worry about violating the rules of drawing trend lines. We can allow for any type of irregularities in volume. These big volume bars, big volume sticks, they can poke through, and that's completely fine. So throughout this area through here, or throughout this time frame, from right around May 19th all the way through to close to anywhere around this area, so maybe June 27th, we did see a general trend of rising volume as we saw a fall in price. This was in an intermediate term bear trend, and as we zoom out, obviously a long-term bull trend. So we're going to see a lot of congruencies, and we're going to try to identify what's normal and what's abnormal, kind of what is acting normally according to the textbook. So after this, we actually see a falling, I'd call that short to intermediate term, trend of falling volume through here. Are we seeing lows? Yes, we continue to see lows, and we can zoom in just a little bit more there. So we see a general trend of, I'd say it's a mix of falling volume and stagnating volume through here, because we are seeing kind of similar lows throughout that entire area. So throughout that entire area, we are seeing a contraction of volume. Whenever we do see a contraction of volume, we do expect that we will see, if we see some type of breakout to follow that it should be followed by either large amounts of buy volume or large amounts of sell volume, large amounts of net buy in this situation, because we end up breaking out. So this, how would you say it? This kind of toning down of net amounts of volume basically represents volatility and represents less traders in the market. So we're squeezing volume down. We are actually squeezing our range of price down. So less volatility, less volume, less orders, less activity, less everything. And now that we've pretty much settled down as much as we can on the Bitcoin price, once we kind of reach our apex of that, then we break out very hard in either the breakout or the breakdown direction. For this case, it was the breakout direction, and it's confirmed by all of this net buy volume. So let's actually go back to the stream, or go back to the presentation, and see if there's anything else related to volume. That should cover a few of those good examples. Let's go ahead and move back out to this. So anything else? Volume trends. We covered how to draw volume trends on the chart. You don't have to worry about any of your candlesticks, your volume sticks passing through like you would on a normal trend. Rising volume associated with the completion of a price pattern. That is the normal situation. The abnormal situation is whenever we see falling volume, completion of a price pattern, explosive volume to accompany drastic moves is normal in all circumstances. So anytime we see a breakout or a breakdown, we expect it to be drastic, or we see that drastic amount of volume, we should see drastic amounts of price. So let's actually move to the next, which is going to be a strategy. This is a textbook strategy called Peaks and Troughs, and you're probably familiar with this if you've looked up individual strategies at all so far. But I do have a nice little diagram that I drew for this as well. But first, we're going to go through the actual technicals of it. So the Peaks and Troughs strategy is based on many of the tenets covered by Dow theory itself. We did cover Dow theory just a couple streams ago, specifically the identification of higher highs and higher lows to represent trend strength. So we can draw that in the chart in just a moment. Interruption of a trend's normality, yet again. So the normal thing would be for the trend to continue. Let's say we see higher highs and higher lows. It's a bull trend. The trend should continue in that direction until we see something to counteract that. So interruption of this normality of traveling in that bull trend direction acts as a possible confirmation for the trend's reversal. Pretty intuitive. Now, what is the formation of this? How do we create our thesis for a trade based on the bearish peaks and troughs reversal? It'll be flipped for the bullish version. But for the bearish version, we have a current formation that is preceded by a big bull trend. So I can actually show that real quick. This is our bearish on the top. The top left is going to be our bearish situation, and our bottom right is going to be our bullish situation. So it's preceded by a large bull trend or a relatively large bull trend in comparison to our current little price pattern. And it's significant in magnitude in comparison to the pattern. This is confirmed by rising peaks and troughs. So we see that through here. We're seeing our higher highs, we're seeing our higher lows, and then we see right around that dotted line is where we're forming our current price pattern for what we're predicting may just act as a rising peaks and troughs reversal. Next, our high price. This doesn't necessarily need to be an all-time high, but it can be depending on your time frame. A lot of the times it will not be an all-time high, especially on the shorter time frames. So you look for that big peak, you look for that blow off top, and then we come down and we actually return to a good amount of support or a good level that's acting as a support. But it's succeeded by a lower high. So that next high that we do form, that next peak has to be lower than our previous peak. So we have one big peak and one small peak. This can be compounded. This can be a combination. We can have smaller peaks as long as we're seeing those lower highs and we don't see a new high that is higher than our big peak, our big blow off. Then we should be still set up for the peaks and troughs reversal. Next, the price breaks below the previous trough or support trend line. So that's going to be the dashed line that we're seeing here. This is our support trend line where we come down from our initial peak, from our what could be an all-time high, it could be just a local high, comes down. We actually see it act as support at that very level. This is going to be our main support for an alert to actually break down from this price pattern. So once we come down and we do see it could be a compound price pattern like we see on the opposite side here for the falling peaks and troughs reversal. We see it act as compound when we have multiple touches to that same trend line. In the situation above, we only have one, so you could call that a simple peaks and troughs reversal. Next, and that's optional, what I just explained, the compound, the price can return to the previous support line or trough multiple times. It can return from the other side. So what we can actually see is, and it's a good example here on the falling peaks and troughs pattern, is if this, after we break out from that dotted line and we come down, if we return all the way to that same dotted line from the top side. So instead of acting as a resistance, that dotted line, what was previously a resistance, is now acting as support. If it holds as support after we've broken out above that resistance, then we are even more confirmed for a continuation towards the long side and a reversal back from that bear trend. So finally, this process may be mirrored for the bullish reversal strategy. As you can see, we have both examples on this little graphical depiction that I threw up. But like I said before, they can be compound. A lot of the times they will not be as simple as this rising peaks and trough reversal, but this is one of the kind of baseline strategies that you would see, especially coming from Dow theory. It all comes from the theory of higher highs and higher lows. And if we start to see something other than the continuation of higher highs and higher lows, we're most likely going to see a confirmation back towards the other side. So it's no longer a bull trend. We're most likely going to see a confirmation back towards the bear side and be able to open up a short side trade for that. So that's what we have for peaks and troughs. Finally, we're going to the moving average indicator. Last week, we talked about the mechanics. Last week, we talked about the mechanics of the moving average indicator. Today, we're going to talk about application. So this is basically a simple strategy, a textbook strategy that you can use using the moving average indicator. And finally, for the last part, for part 3, we're going to go into moving average crossovers based on convergence, which is whenever you have multiple moving averages on your chart and you wait for those to cross over. For this application, for this slide, we're only going to talk about when our price crosses over our moving average. So moving average crossovers based on price. They occur when the price of the asset penetrates the moving average line. So that's very simple. We can go over to the chart and you can see that our price actually crosses over our moving average line multiple times in this situation. This isn't the perfect example, but our price crossing over our moving average, that's going to constitute a moving average crossover based on price. So per usual, that's actually may act as a confirmation of a changing price trend, but we need to make sure that we have a few things in order first. Per usual, this indicator should not be used by itself, but as a confirmation of price action itself. So like, who said that? Lalit did say price, volume, and time, specifically in that order. So we want to identify price, volume, and a good time frame before we add any of our indicators and try to confirm. So we don't want to confirm or base an entire strategy on just a price crossover of our moving average. We want to make sure we have a good price confirmation, some good volume confirmation, and our time frame works out as well. So we don't want to use our moving average or any single indicator by itself, or completely without considering price or volume, or at least a couple other confirmations. So some key properties of the MA crossover based on price. For a moving average crossover to be significant, the moving average itself must properly reflect the underlying trend. So if you have an improperly drawn moving average, something that doesn't accurately reflect any type of confirmations back towards the long side or towards the short side, and doesn't actually act as a moving support or a moving resistance, then your strategy itself isn't going to work out too well. You need to make sure that you have a properly drawn and proper inputs for your moving average before you consider opening up any type of strategy based on the moving average and price crossovers. So generally speaking, the longer the time span covered by a moving average, the greater is the significance of a crossover signal. This is very vital. If you have a 314-day moving average, it's going to be much more significant when our price crosses over that very long-term moving resistance or moving support, versus whenever we cross over our 100-day moving average or our 15-day moving average, it can become very extreme, the difference between our time frames and your inputs for your moving averages. Chart analysis on KP3R. Is that a cryptocurrency? Actually, I haven't heard of that yet. Thank you, Nuno. I really appreciate it. Let's go ahead and keep going. So MAs act similarly to trend lines themselves and are commonly referred to as moving trend lines. So usually we just draw flat or horizontal trend lines. Sometimes we draw sloped or diagonal trend lines, but the moving average itself does act mathematically as a moving trend line in comparison to something like, or whenever you consider the application that you can apply to, whenever you consider what you can do with your trend line itself. Sorry, I was kind of getting mixed up with my words there. But there are very similar properties to a horizontal or a diagonal moving average that we should consider whenever we are trying to determine how significant a crossover of this moving average is. A few of those are a number of touches or approaches, the time span itself, and the angle in which we are approaching or crossing over that moving average. Okay, so KP3R isn't on Bybit. That's all right. If you have any coins or pairs that you're looking at that are on Bybit, I'd love to add those for the chart analysis towards the end of this. Next, whipsaws and false breakouts or breakdowns are almost common depending on the moving average input. So if you have a very tight moving average, something that's really reacting to price a ton, then we're usually going to see less of these. If we see a moving average that's, sorry, I'll have to draw that on the chart because there are certain circumstances as we move through the different time frames that's going to change. But whipsaws and false breakouts are very common depending on your input for your moving average. I'll show you guys kind of how to combat that. So this further emphasizes the need for another form of confirmation. So some price confirmation, some volume confirmation, maybe another indicator to go along with or to accompany your moving average, because we see so many whipsaws and false breakouts that basically shouts out to us, don't only use the moving average, make sure you got something else to go along with it. Finally, moving average crossovers based on convergence, such as golden crosses and death crosses, will be touched on next week. So we'll go over all of those. It's kind of just a separate way to use moving averages. Instead of just one, you'll have multiple moving averages. So let's actually move out to the 4 hour. Let's remove some of these drawings first, and let's reset our chart, and then let's really zoom in so you guys can see. So this is Bitcoin to US dollar tether. This is the 150 4-hour moving average. I think it'll be a little bit easier if we touch on the daily. So this is based on a 150-day moving average, 150 periods. So if we look at our price right through here, our current moving average is at 44,595. If we went back 150 days, added up all of our closes, and divided by 150 days, this is the price that we would get. And that's why we are currently plotted for a 150-day moving average at 44,519. This is also a simple moving average. So it's equal weighting to all of the periods all the way up until our current period, rather than something like a exponential or a weighted moving average that we talked about last stream. But we're going to stick with a simple for today. And so what are we seeing? Let's go ahead and count the crossovers that we're seeing. And we're also going to talk about where we're seeing whipsaws. So there are two types of crossovers we can see. The first is going to be based on our absolute price or our shadows. So we see an absolute cross through here, where our shadow busted through or penetrated our moving average, but we're also going to see what I like to call close-based confirmations or close-based penetrations whenever we see our candlestick body actually cross through rather than just our shadow. So we actually saw very early, not super early, but a couple days early, a crossover through here, and then we actually saw it fully confirmed whenever the body of our candlestick penetrated our moving average. So the standard strategy would say, all right, if this is a very good, a very well kind of optimized moving average compared to our chart, let's say you've determined that the 150-day is perfect for confirming trends for Bitcoin to US dollar tether, and I'm going to make that one of my confirmations. So you'd say, all right, once we see a close below this level, which we did see right through here, I'm going to go ahead and open up a short side trade from this price level, and we won't be confirmed back towards the long side until we see a breakout above this level. So you go ahead and say, all right, I'm going to move back and I'm going to look for some horizontal support and resistance, and I'm going to confirm whatever we saw on the moving average with price. So you say, all right, this actually confirms a new low, almost confirms what we saw from the Peaks and Troughs strategy, the Peaks and Troughs reversal, where we saw this lower high, and then we see a crossover, or actually a lower shadow and a lower close than our previous low. So this is a very good combination of the moving average and the Peaks and Troughs strategy. This is going to act as support at the moment. Excuse me. Now that we see that breakdown, you go ahead and open up your short side trade. You set your sell targets wherever you'd like. I wouldn't follow kind of that standard long-term strategy that I think a lot of people just read the textbook and say, all right, this is the strategy. If we break down below your moving average, then we're bearish and we open up a short, and we are not going to close that out until we come back above that very same moving average. I think that's a strategy that doesn't really work out a lot of the time. Obviously, you can test it compared to whatever your input is for your moving average, your specific strategy. But for me personally, I'm not a huge fan of it, because what we see in is very similar situations to what we actually see through here, where we don't actually cross over until a very similar price point to our entry. So if we enter at 46,268 with a short side position, then you end up exiting at, a couple $100 lower. Really, that's, $400, $500, $600 lower. That's very inconsequential. Like, we don't get a lot out of it. We don't actually profit more than probably 3 percentage points based on those closes. Depending on if you had another situation, or if you had another strategy where you say, all right, I'm going to set sell targets based on previous lows or previous breakout areas. You set one at 32,660 and you're completely separate. So what you're kind of doing is you're separating your entry and your exit strategies. That's a 33% trade through there. That's a 30, just to be reasonable and to be conservative, that's 28, 29% trade. If you're making your entries based on your moving average and you're making your exits based on horizontal support and resistance, so you can go ahead and create a combination thesis or just a combination strategy in general. So that's what we have there. Now, if you're making a strategy for the breakout side above our moving average on the 150-day, we can actually remove this resistance, or should we? Yeah, we can real quick. So we wait for a close above that level. Where are we going to see that? Let's see if this works out. So we see our close. You make your entry right through here. Zoom in a little bit more. And where are you going to make your exit if you base everything on your moving averages? We don't actually see closes until down here. We see a close below. That's almost a whipsaw, but we still see a regular close through here. So that's enough to say, all right, this moving average does not work out for exits. It may work out decently for entries, but you really just have to go through kind of probably the last year to two of price action to kind of back test your strategy based on your moving average input, and then really focus on probably the last 3 to 6 months for actual application, actually setting price targets, setting variances. So if you say, all right, well, I'm going to wait, or I'm going to ignore any type of false breakdowns by 2%, anything below 2%. And you say, all right, that'll work out for this situation. Look through the last 3 to 6 months of price action. Look for how you want to confirm your specific entries and specific exits based on that most local, that most recent price action. But back test everything, the strategy itself, kind of the baseline strategy for at least a year. So back to the live stream. I believe we're going to cover, let's see, crypto flash crash, short, hold market. All right. How's it going, Lord Kenzie? Thank you for joining the stream. Now we are going to the last slide, I believe, which is when we talk about a classic master trader that you may have heard of. His name is Seykota. He is a legendary trend-following trader. A lot of these guys are trend following traders. Tudor Jones was a trend following trader. We talked about him last week. Who did we talk about before then? There's a few guys. Bruce Kovner we spoke about. I'm not sure. I can't remember if he was a trend following trader, but at least Ed and Paul Tudor Jones. Trend following commodities trader with a focus on computerized trading systems and programmable strategy. He actually is most famous for developing the first application of a computerized trading system for the futures markets in 1970. I don't know if it was 1970 itself or in the 1970s. I think that's something where I saw some discrepancies across my sources. He recorded some of the highest profit percentages for individual clients. He did have one client that he kind of started out with, one of his first clients, who invested $5,000. And at the very end, he was a multimillionaire. He made an estimated 250,000 to 1 million% for that very same client. So pretty extreme results. And that definitely isn't an average, but you can understand that he became most notable for some statistics like that. So what are some of his axioms as a trend following trader? He has a very great mindset. The source for this is Market Wizards by Jack D. Schwager, where he sits down for something like a 6-hour interview. Jack D. Schwager shows up for like a 2-hour interview and he says, I can't possibly get all the information I want to get from you. So he sits down for the whole day. Something interesting about Ed Seykota, he doesn't actually have his monitors open. So he doesn't have just a bunch of trading monitors with all of his quotes or all of his tickers. He actually gets all of his price quotes once a day and then trades based off of that. I thought that was very interesting. Definitely it separates yourself and allows you to kind of take a break and separate, thinking about the markets, thinking about price all the time. Market Wizards, Lalit, my guy. All right, so just some quotes, some axioms from Ed Seykota. I believe he wrote some books himself as well on trading. But I'm gonna have to check into that and maybe order some and start going through those. So number one, systems don't need to be changed. The trick is for the trader to develop a system with which he is compatible. And I'd say I generally agree with this. I definitely don't say that's incorrect. But it's very hard to understand kind of based on this one axiom, like what does compatible mean? Does it just mean profitable? Does it just mean a system that works with your emotions? And I think my conclusion, based on my opinion, is that it's a combination of everything. So he's saying that the systems themselves, your strategies themselves, most likely don't need to be changed. It's how you're interacting with those systems and with those strategies. So you can have a very workable thesis, a very profitable trade thesis and trade strategy that'll work in the long term. But if you are personally incompatible with that, if your emotions sway too much for that strategy, if you're doubting the strategy and you end up making changes to your trades before they actually exit. Hey, how's it going? Hey, Y? Good to have you here. Thanks for taking everybody's luck that week or last week. So basically, you can be incompatible with your system based on mostly emotions and psychology. So a lot of the times you don't actually need to change your strategy. You just need to change how you think about trading and your perception of, how your trading's going. If you can handle, 6-week losing streaks and that's what your strategy allows for, and then it's followed by these big winning streaks, but you don't have kind of the mental emotions to handle that, that's completely fine. You find a strategy that's a little bit more safe, maybe something that's a little bit more consistent towards repeatable gains. Yeah. Hey man, that was pretty insane. I'm hoping there's enough people in this time that everybody gets some good chances to win those US dollar tether giveaways, but luck was definitely on your side last week. All right, so the 3 elements of good trading by Ed Seykota are number 1, cutting losses, number 2, cutting losses, and number 3, cutting losses. This really goes into something that we've kind of formed as an axiom for this series, for this live stream series, is setting those stop losses and allowing them to hit, not moving them in the middle of a trade, really not moving or manipulating anything in the middle of your trade, letting those stop losses hit, letting your losers be cut, not letting them ride. Basically saying, all right, I'm gonna choose a price, I'm gonna choose a stop loss level that I believe once the price goes down to this level, then my thesis is wrong, or in the situation according to this thesis, I am wrong and I should cut my losses, and you actually stick to that. So again, it goes back to Paul Tudor Jones, preserving capital, playing great defense versus great offense. What's more important is cutting those losses and playing defense. So finally, in order of importance to Ed Seykota are number 1, the long-term trend, number 2, the current chart pattern, and number 3, picking a good spot to buy or sell. Those are the three primary components of my trading. So this really goes into what we talked about on week 1 of this live stream series, which was going through the trade outline. And what is the strategy for picking coins? What is the strategy for just looking at your charts and saying, all right, can I form a trade based on this chart? First, he goes for the long-term trend. He determines properly if we have, higher highs and higher lows, if it all aligns with Dow theory, if it aligns with Wyckoff. I believe he used a little bit of Elliott wave analysis as well, so I'm sure that helps in terms of timing. Next, you have the current chart pattern. So what are we looking at in terms of the short to intermediate term, even a long-term chart pattern? Should we continue this pattern? Are we getting close to the end, using volume to confirm, or at least in some situations predict if we're getting close to the end of that pattern, just to determine timing. And finally, picking a good spot to buy or sell. A lot of the times this is going to be based on support or resistance. In some situations, maybe you have a very good moving average price crossover strategy. You may use those to pick a good spot to buy or sell, but you want to make sure you are confirming that with a couple of other indicators, and most of the time price. And those are the three primary components of his trading. Yet again, when we're going through and speaking about these master traders, we're not trying to follow them word for word or considering them to be kind of the end all be all for trading strategy. We're just learning from guys that have been profitable in the long term. I believe another quote from Ed Seykota is that there are bold traders and there are old traders, but there are very few old, bold traders. So we're really learning from the guys that have been profitable in the long term, in the very long term, and have become famous from that, for managing kind of large funds. A lot of these guys, or people, there will be people out there that are successful traders that don't become famous like these guys simply because they're retail traders and they don't trade for institutions. They don't trade with other people's money. So a lot of times you get kind of a separate perspective, a perspective of like a semi-institutional trader, or somebody who's trading with large amounts of capital. But we still learn a lot. We still learn a lot based on sentiment and emotional analysis and just managing kind of the psychology of trading. So let's go ahead and get into the very end of this live stream, which is going to be first some chart examples and pair requests, and then those giveaways. Actually, let's do one giveaway first like we did last time, and then we're going to do some chart analysis. So right now, what you can do to prepare to enter these giveaways is have a Telegram or Discord username. So I'll give you guys maybe a couple minutes to set those up if you don't have one, and make sure you are in the Bybit Telegram or Discord, because that's how you're going to claim. That's how you're going to reach out to Kilo and get, most of these master traders were commodities traders. That's true. I mean, you have to think about if they're a commodities trader, if they're a futures trader, if they're a Forex trader. You have to think about how does that relate to cryptocurrency, especially if you're only trading cryptocurrency. So a lot of the times, if you're only trading stocks, you can't really learn as much from the commodities traders, but they do have, everybody kind of has the same base. Everybody has, trend following or base technical analysis, their own strategies that will apply across the board. So I think there's something we can learn from everybody, but you definitely have to say, all right, this is specific to commodities. This is very volatile in the short term, or even Forex. And you can say, all right, maybe this won't work out for a very long term, an IBM, a blue chip stock, where we have such a large market cap. Thank you, Nanu. I really appreciate that. Let's go ahead and get into this giveaway, guys. So we've got to go back here. And then we switch over to... So how will you guys enter this giveaway? What you're going to want to do is go to menti.com, menti.com. We're going to open voting, and you're going to enter this code 42030331. So if you'd like to enter the giveaway for, I believe it is a $50 US dollar tether giveaway, you can go to menti.com. Use the code 42030331, and then you can enter either your Telegram or your Discord name. If you enter Telegram, go ahead and put -Telegram or -TG. For Discord, put -Discord or maybe -D. What is this little thing? Connection's unstable. I hope not. I'm on Ethernet. So, hey, Y, back again. Where's Oluwazandi? All the winners need to come back. All right. And do make sure that you are, if you do happen to win this giveaway, make sure that you are active or generally active in the respective group. So if you submit your Discord, make sure you're pretty active in the Discord group over the next couple days, so that we get a chance to reach out to you, or you reach out to us. There's a specific process so that we can distribute these rewards. All right, I'm going to give it a couple more minutes. Also, if you have already entered your name, go ahead and make a recommendation for some chart requests so we can get through those. All right, 8 people. 8 people. What did we give away? Last week we gave away 2 of the US dollar tether giveaways, so $100 total. And then we gave away that NFT Paris NFT week ticket. And that went out to, who'd that go out to? Bybit Itza. So I hope you enjoyed that, Bybit Itza, if you're watching right now. All right, so we'll give it maybe 2-3 more minutes, and then we will close out, because I understand every time we get just a couple people that kind of come in late. Some algo to US dollar tether. Let's do that. Don't be afraid to make recommendations for some Bitcoin pairs as well, like algo to Bitcoin. I love those. Near, I will check and make sure that's on Bybit. All right, let's give it about 60 more seconds. For anybody else, if you have not entered, it looks like the entries do align with our current viewership. So let's close it out in, say, 30 seconds. All righty. Hope everybody has a very wonderful weekend. Not that the stream is ending yet, but I like making these streams on Fridays. Saturday for some of you guys. Probably Friday afternoon to Friday night for most people in here. But Friday morning for me. Kind of getting started on the weekend. Get some work done. And then start relaxing. So let's give it 5-10 more seconds. Last call. We got 16 people in. Here's who's entered. If you're not sure. 5, 4, 3, 2, 1. Let's close out. All right. So I'm going to go ahead and escape from this. And I'm going to go for the wheel of names. You guys remember this. So I have to. Let's share the wheel of names. All right. Latest giveaway number 8. Here we go. It's got 16 entries. 16 entries. All right, let's go ahead and do it. Good luck, everybody. Good luck to everybody who entered. Oh, man, that was close. That was close. Oh, man. All right, squeaky clean. 3,100. That's on Discord. Congratulations, squeaky clean. Congratulations. All right, let's do some chart analysis. GMT. 16 people watching and 16 people entered. Oh, 12 people watching and 16 people entered. It's a little bit suspicious. I don't know what's going on there. Maybe multiple phones or something. But yeah, congrats to Squeaky Clean. Okay, GMT. Let's see, anything else? Oh, you won. I hope Jesus. I didn't realize. Everybody's got a different YouTube name than Discord. GMT. All right, let's start with algo. So I'm going to make sure that you guys can see very clearly. I'm going to zoom in to make sure it's nice and visible. Let's find algo. Let's just search for it. One on Bybit. Yes, there is. I already have it favorited. There we go. All right, let's go ahead and take the... Well, we can leave the moving average on. Why not? No, actually, it doesn't do anything. At least the 150 day. Okay. Not a lot of price history on this one. Let's go ahead and check that real quick. Wow. It only goes back to September of 21. So we can still, we can zoom into something like the 4 hour and find out a little bit more, but let's go ahead and first see if there's anything that we can learn from the daily. Let's look for, I spoke about this in the past, but something something I've found myself to do is drag from the top and just come down and look for alignments. There's something, a possibility, but we're going to wait and we're going to zoom into the 4 hour. We're going to zoom into the 2 hour. We're going to see if there's anything there. Let's go ahead and make it red for resistance. We're going to continue to come down. Next, we're going to go based on these closes up here. Looks like that's not proper. Maybe a little bit lower through here. That's possible, but we're going to leave it, and we're actually going to look at the 4 hour for that area. We come down. We look for the bottom side of this trading range. That looks decent. 89. I like that. Yeah, it's good on closes. It's good on shadows. It's good on the breakout. It's good on holding resistance. Good on approach through here. That's really nice. We're going to continue to come down. See if there's anything here. That's possible, but I think we're going to move into the 4 hour for this area based on these closes through here. Zoom in even more. We're looking at his alignment for this area through here, as well as these shadows, these bottom side shadows. We continue to move down, and we can actually draw it, but we might end up moving it. We'll probably end up moving it on the 4 hour. So that's what we have for resistance in terms of this entire trading range. As we continue to move down, we've got very quick price action through here, quick price action through here, so we can almost ignore that entire area because we're going to want to focus on areas that have where we spent the most amount of time. We continue to move down. Looks like where we held through here based on closes gives us a decent amount of alignment basically for our breakout as well. Now, is it going to tell us much for these closes? Those closes are up here, extensions to extensions, or closes to extensions. Either one, the 4 hours should tell us more. It doesn't really give us a lot of application through here, which is what worries me, but we'll see what it does on the 4 hour. So that's what we have now. And in terms of the bottom side, that's actually, there's an indicator I want to show you guys next stream. It's called the Donchian channel, and it actually gives us really good indication of kind of where's our low. But basically we can just track that down to 6.7. So that's not really going to act as a support. This is just basically saying this is our low that we want to look out for. Are we seeing a higher low? We are seeing a higher low at 68. So that's solid from there. So we're going to hold that. Now we're going to move up and slowly start to look for good alignment from these areas. It looks pretty nice in that same area, right around 77.40. I'd stick with that. But in terms of the shorter term, looks like we do have a little bit more price action we can look at through here. And as we move higher, this isn't going to be relevant really at all just yet, unless you're going for an intermediate to the long-term trade, which I don't think we would be because of there's no good confirmations for an intermediate to long-term. But we can measure that just from our first confirmation, 11.81, 16.89, and 27.48. So those top two are probably pretty irrelevant at the moment. But this bottom one, we want to see what that feels like. So we may want to bring this down just a little bit. It looks like we have good alignment through this whole area. We held it back through here. We approach, we hold, let's see, zoom in there. Yeah, that's still fine. It's fine through here. It's fine through here. We break out, we come down, we still hold. We see no closes below. I'd say that's a good area. Now, do we want to sell at that exact price? Probably not. We would probably want to go a little bit lower just because it's almost an obvious area. If we can do it that quick, there are going to be other people looking at that same area. So we want to bring it down. Where do we want to beat out? We want to go for our next areas of support and resistance. So it looks like we have some through here. Maybe we go a little bit lower than that. And that's all coming from these areas through here, this area through here. And then now we go through here and we see what we're looking at. We got a previous high. I wouldn't say any of these are very vital in terms of price action. We're just trying to beat out any type of resistance at 86.8. We bring it down to 85.25. going to be a little bit more conservative, just below 85 cents, and you'd probably be perfect for setting a sell target. For confirmation, we've already got, this would form a breakout and is acting as a previous support. So I'd say, even though we're going to need to see a little bit of a stretch between our current price action and that first confirmation, it's probably worth holding out for it. So let's go ahead and measure that. It's right around, wow, 4.92. Got to be patient on that one. We see confirmation above that level. Looking at right around a 9.9% trade. For the short to intermediate term, I'd really call it short term. Yeah, probably a week or two for that. Stop losses would go, we'd probably have to see and wait and see what we form through here. If we form a decent amount of resistance, if we butt up against that just a couple times, we can go slightly below there. You can go slightly below there. We do have a lot of room in terms of, so we can draw a long position. We do have a lot of room. So if we set our target up through here, and I can zoom in on this, then we have a lot of room for actually setting that stop loss just because of the ratio. So that's already a 5.06 risk reward. You can bring that down quite a bit, maybe to something like there for a 4, below our previous high, maybe below there for like a 3.34, be perfectly fine. Stop loss of 3.04%, sell target of 10.15, and that's pretty balanced for risk reward. So that's what we have for algo, really, for the short to intermediate term. In terms of the long term, we're waiting around just a little bit too long. We need to pass through a few of these areas before we can do anything for the long term. So next was near, but let me check the comments first. OG indicator. Do you have a group where you teach? I only teach on these live streams. But if you come back every week at 4 p.m. UST, we go over a different topic every single week. So just here. All right, so let's do, next is Luna. So near, and then GMT, and then Luna. And then we'll do one more giveaway. So I think I've seen near on Bybit. Yeah, there it is. Near to US dollar tether. Yeah, to get, oh, no, we've got some good price action. We got a little bit of history. We got a little bit of historical price action. Going back to, again, October of 2021. Kind of a newer listing. In terms of the long term, that kind of shouts out that peak through here. $20 flat, psychological resistance. Let's start with that. Well, actually, we're on the 4 hour. Let's move to the daily and see what it looks like. This new mic feels so weird. It's the Rode NT1. I finally got all the connectors and doodads and setups. But it feels weird. It's like under my chin, versus the other one, the Elgato Wave. I don't know if you guys have any experience with any of these USB or other microphones. So yeah, let's do it at $20 flat, just for posterity. Say that's a psychological resistance. Make it red. Bottom side of the range, we don't want to go all the way down here. It's going to be irrelevant at the moment. We push up until we see our next area of kind of true support. Let's say it's this breakout area. If you want to be absolutely correct, you'd probably be estimating between 11.23 or so. We can be a little bit more conservative and just draw it lower. Just drop it down. People, how do I say that? You can draw it a little bit higher, but just to be conservative, we're going to draw it lower for now, and then we're going to see what it looks like on the shorter term. So that's our maximum trading range, and I know that's a giant magnitude, but we're going to work in from there. So as we work in, where's our next area? And it's probably going to align a little bit more with that $12 area. Should move higher. This area through here. Where was that breakout? That's a tough one again. Situations like this, and I'll explain how that's confusing. Basically, you're going to draw from the bottom side of these closes through here, closes through there, almost to closes through here. So either from here, or an average from these troughs. And then we're looking to line up for this peak through here. So we go trough to peak, and it lines up really well on closes. But then we draw based on these extensions through here, and that may act a little bit better in terms of what previously acted as our breakout area. So our breakout confirmation, I mean, for this short to intermediate term bull trend. I'd say short term bull trend in just a few days. So we can be a little more conservative. We can drop based on closes, and then we can work from there into the 4 hour. So that's going to be our next support at 13.49. Again, we're not really getting into anything local just yet, but we're about to with this price pattern through here. Where we're going based on resistance, I'd say that's pretty obvious right through there. Going to be our top side resistance based on closes on the daily. And then our bottom side support, we don't really have anything just yet because we are still making those higher lows. So hopefully our 4-hour can tell us something else. So now let's zoom in and let's reconfirm all these price levels. Still, we're going to keep that at 20. We wouldn't set a sell target there, but we're just going to keep that there to kind of understand where that actually is in relation to our current price. Currently at 1589. We're going to keep this down through here because it's so far away. And what we're going to want to manipulate are going to be these first or these primary sell targets or these primary support and resistances. So this still looks good. We do see slippage because we've moved from the daily to the 4-hour, but it still looks good in terms of any type of, there's no extremes. So we see slight breakdowns and then they act as almost these short-term little breakout confirmation areas. Like we see through here, it holds resistance, we break out, and we see confirmation towards the long side. Same through here, it holds resistance for just one. Actually, that didn't even really hold resistance, but it held support through here. Basically, we just saw it close down below. We come back up, hold support. We see confirmation once we see a bounce back off of that support. So that works out really well and that aligns really well. We're probably going to see the same thing through here. We don't even need to really look at it. But as we zoom in, we really want to see how that looks in terms of local price action. So it still looks good because it acted as a breakout area through here, aligns with our previous butts up against. Those weren't even approaches. Those were full touches up against that same price level. It's almost perfect. We usually don't see it perfect alignment between moving from our daily to the 4-hour. Usually see a little bit more, but it's still, you know, we see these whipsaws, we see these false breakdowns, and we see these kind of short-term flips, support back to resistance. Now, for this, we can actually draw a diagonal trend line. We're not going to use that for any type of confirmation or any type of trading. We're just going to use it to kind of determine what's our slope, what's our general momentum pushing back towards the long side. We're just going to draw something, and then we get to line it all up. So make sure it doesn't cross through our closes unless we see a very specific, either a whipsaw or false breakdown or a tweezer bottom or tweezer top. So that's tough. We're going to, we don't really have very many good levels. We can try it from down here. That's going to be very flat, but that's not going to, well, see, that's the problem is our current price level. We don't know where it's going to come down to. That's always the problem, isn't it? Don't know exactly what's going to happen with the price. Why don't we know exactly where it's going to go? So we're going to move this a little bit higher, and that's still good alignment. And then we can draw one more and just see if the steeper one makes more sense. So the steeper would be, no, it doesn't really make sense. Just zoom out a little bit and kind of look at that. So we're flat on the top. We're still seeing higher lows. The slope itself doesn't matter except for timing. And for that, we can just follow volume. So we're actually seeing falling volume so far. Once this kind of gets to the very smallest point, and then we see either big buy volume or big net sell volume, then we should see a confirmation in one direction or the other. Where's that price going to align with? Most likely, we're going to see somewhere around 1750 for the long side is what I would look for. Anything shorter term than that, and we can measure that, but we're going to have to zoom in further. 4.83%, right around 10%. You got to be patient on this one. If we start making those lower lows, then we're looking at some confirmation towards the short side, maybe towards this area of support. But for that, we would have different levels. Our first confirmation would be our breakout area right through here, right around 15,418. Second confirmation would be closes below our lowest closes. Then third would probably be 1492. I'd say a mix of those. A mix of our breakout support. So this acted as a resistance for the very short term. And so for the very short term, it's going to act as a support. Resistance through here comes down. It's now going to act as support. We saw that act as an approach through here. Same level. That's going to be our first confirmation. And then we start looking for those new lows, forming lower lows. So those would be the two confirmations. I'd probably wait for that lower low, unless we saw a very nice close and we're pushing all the way down. But that's probably going to happen at the same time if we see that. Otherwise, we should hold that pretty well. Just because we've seen so much alignment, same levels through here, same levels back through here, and we just have to wait and see. So that's what we're looking at right now. A little bit of patience for near to US dollar. Kind of a little bit more of an intermediate term trend, I'd actually say, for waiting towards the long side. For the short side, we just have to wait for right around 40 cents towards the bottom side, maybe a little bit more than that, closer to 86, 80, 92, closer to 90 something cents towards the bottom side. All right, next. I will definitely be coming back next week. Excellent. Can you transfer everything inside your brain to mine? Hey man, everybody's on their own journey. I'm sure you've got some good trading strategies as well that I'd love to learn. No notification. Does that mean for YouTube you didn't get a notification? Let's actually do one more giveaway, and then we'll do one more. We'll do either GMT or Luna, whoever's still in here, and kind of votes for theirs first. So let's do one more, that last giveaway real quick. So let's switch over, exact same thing. So we're going to reset these results. And it's the exact same thing that we just did. I'm going to open it up right now. And voting is open. You want to go to menti.com and use the code 42030331. 42030331. And then submit either your Telegram or your Discord name. And then put either -Telegram or -Discord. That really helps. I believe it's open. Make sure. Yes, it's open. Sweet. Hey, why? And Oluwa's Andy. They know what it takes to win. You got to get it on every single one. So make sure that you do have, or you are in the Bybit Discord or Telegram group. So if you submit your Telegram, make sure you're in the Telegram group. That way we can actually get your UID and distribute those rewards to you. And then Oluwa's Andy and Hey Why, the distribution for both of your rewards are good to go. So they've been approved. Again, it can take up to 20 business days for the whole process to actually get that, but no hang-ups or anything. So should see those very soon. Oh, yet again, Ace Tylene. Ace Tylene, you won a giveaway a couple weeks back. Go ahead and let me know. I know you had a different name. I remember your avatar. I know you had a different name in YouTube, but let me know if you're in the stream, because that name isn't correct on Telegram. That's the name of a channel, not the name of a user. So I still need to get your Telegram or your Discord name so I can distribute those rewards to you. All right, so we'll give it maybe 3 more minutes, just so people, if people are joining in late, you're going to submit your Telegram or Discord name. Go to menti.com, use the code 42030331. Make sure that you are at least somewhat active in the Bybit Discord or Telegram so that we can get those rewards to you. Anything else? Nope. We'll do one more chart after this. You guys think GMT or Luna? What do you guys think? What are the votes? I feel like people are going to vote more for Luna. That's my prediction. 18 people. Nice. All right, we'll give it 1 or 2 more minutes. Also, if you guys are familiar with the stream, let me know how this microphone sounds compared to the old streams. Luna, please. Okay. Your Nuno 6759. Gotcha. Luna. Yeah, a couple Luna votes. GMT. Oh, that's close. 2 GMTs, 2 Lunas. Might just be up to me. Oh, man. It's equal. 3 to 3. All right, we'll figure that out after we select the random winner. So let's go ahead and close out. We're going to give it 10 more seconds. If you need to submit your name, do it now. 5, 4, 3, 2, 1. Voting is closed, ladies and gentlemen. All right. So let's show. Let's close. We have to clear everybody. As you guys have learned, there's no rules against one person winning both. So you have a good chance of actually winning both, as we learned last week. So let me get these results real quick. All right, we should have 18 entries for the 8th giveaway. Make sure it looks like... Oh, no. This is the 9th. All right. So everybody, let's go ahead. 19. Make sure there's no doubles real quick. That looks right. I'm not seeing any doubles. Oh, this is what's going on. There we go. Okay. We got 18. All right. Good luck, everybody. $50 US dollar tether spot giveaway. Oh, man. Hey, why, dude. Wow. That is completely in the middle. There's no way that's right in the middle. Olumide Broski on Telegram. You have won the $50 US dollar tether giveaway. So that's Olumide. Why'd you pick that name? Olumide Broski. All right, congratulations, Olumide. Thank you, everybody, for joining. And if you didn't win one of these, we got next week. We're going to have more. So don't worry, guys. Let's go back to here. Congratulations, Olumide. So, GMT or Luna? If Olumide's in here because you won, you can choose GMT or Luna. All the way from Nigeria. That's awesome. Will you go over the concept of the market maker in the future? Yeah, let me write that down. Market maker. Yeah, I guess we could do it specifically for crypto, or we could do it general and then crypto as well. We can try to do that next week. All right, so let's do personal choice. I choose Luna. No. We have time. I can do both. All right, Luna. Luna first, and then we'll do a little bit of GMT. We'll do both of them quick. We'll do half and half. All right, so let's zoom out as far as possible. Let's go to the daily. See what we can get. See if there's anything that really stands out in the longest term. Looking for immediate resistances based on this price action through here first. Also coming back through here a little bit. So we didn't really hold this. We only held it for a very short period of time, and it was right through here. I bet the 4-hour will tell us a little bit more, but we don't really get a lot from this area. We don't really hold it well. It's interesting. So that's going to be a resistance at the moment. Now back towards support. That's probably what we're looking at right now. This is this breakout area. See how our breakout area, or almost aligns with our breakout area through here, through here. It's going to currently be a support. Let's move into the 4-hour. Unless there's anything else that's really obvious. They're all higher lows. We're not really forming much. We're butting up against that same area. 4-hour. And let's stretch this out. So we're going to keep it with all this local price action. We don't really need to go back too far back through here because we kind of learned from the daily everything we need to know from that everything before like February. So everything's going to be local now. Now this isn't the perfect, this is on the daily candlestick time frame, the breakout area, but it is not on the 4-hour. What we're most likely seeing is something lower than that one step down to this area through here. Makes a lot more sense, possibly a little bit higher than that as I can zoom in really. Again, we're seeing that where we see the opposites. So we see our bottom side shadows from our support side best align with our top side closes from our resistance side. And then the opposite also occurs. So our top side resistance from our support side is based on our shadows versus our bottom side support based on closes. So we see that honestly more often than not where it's kind of exact opposites. And that can make it tricky, but it's going to depend on what side we're coming from. So now we're coming from the bottom side. It's going to act as a resistance. We want to go based on these previous closes through here. So it's going to be a little bit higher than it would be if we were coming based on support. Even then, it wasn't perfect based on support through here. So this just might be a better level in general. This is just a better hold. We got more touches. We only have one touch through here. We got multiple touches through here. So we're probably going to completely ignore that lower level, even though it has really good alignment based on our breakout area. So zoom back out just a little bit, see if there's anything above there. This is still resistance. We're going to make that red. Anything down through here. We're going to need to zoom in there. Bring this down a little bit. Yeah, so we go local. It's a lot of price action, a lot of magnitude. We're at $79, and all of this is above 100. So we come in a little bit more. We say, all right, let's shorten up our time frame. No reason to go that long term. Get that out. What were we looking at before? Bottom side closes. That's a lower, it's a higher low, higher low. Quick tip. If you guys are trying to figure out like what's the absolute low here, maybe you've got a double bottom or something, or you just have two very similar price levels. And you're trying to determine, all right, did we actually form a lower low or was it higher? What you can do is you can make sure that your little indicator is right on that candlestick. And then if you go into the top left-hand corner, so up through here, you actually have your open, your high, your low, and your close. So I'm going to go to the red here. And so our bottom side or our close was at exactly 82,460. We go through here and we say, all right, what's our close? Our close is at 82,415, and you can do a very exact comparison of those. Same with our shadows. So you'd say our low through here is 80.525. Go through here, our low is 81.315. You can keep doing that, especially if they're very similar, very close. But most of the time, if they're very similar, if they're close enough to where you can't eyeball it, then you can just call that the same price level, especially for something like a double top or double bottom. Those do allow for a little bit of variance. So let's just go with this because I keep looking at it, and we can see it's the most obvious. We're probably going to want to beat out other traders in this situation, but this is still the 4 hour, and it's most likely going to be a shorter term trade. So we could move into the 2 hour. Let's go ahead and measure some of these stretches and just see what we'd be looking at in terms of timing. 2.47, 14.96, but really right around 11.81, 14.49. We probably want to stay under right around 92 in terms of setting sell targets for the short to intermediate term. What we're really looking for is this is acting as not necessarily a trading range just yet. We don't have enough points. We only have one resistance and two supports and a low that hasn't really formed yet. This trough really hasn't confirmed as a trough yet or at that level yet. So all we're really working with is one confirmation. We're seeing volume again doesn't give us enough, so we can zoom into the 2 hour and just get a little bit more specific. And it's the same thing. Everything aligns yet again. We'd be looking at, let's go ahead and measure from any type of confirmation through this area to below our local high. Our local high is up through here, but that real resistance is closer to here. So you'd be looking at something below there, maybe 6.42. This is all very short term now as we're trying to stay or kind of zoom in more and more. So staying below here. So it's a tough one yet again. We really need to see a close above right around 82.41. We did just form that lower low. So we'd most likely not want to go for these longer stretches because we now have a little bit of an inclination towards the downside because that's our third lower low. What we'd be trying to do is basically catch a bounce and a breakout above this level, a nice short-term confirmation above this, and we're going to want to stay under our local high, and it's really going to be a short trade, not the short side, but like a short magnitude trade, low profit, probably between 4 and 5%, maybe even below there at like 4.32. We probably need some margin on that, just in terms of the greatest probabilities at the moment for this price action now that we have formed that lower low. So let's finally do some GMT. Let's see if I have it on the favorites. I should really make this alphabetically sorted. GMT. Is GMT on Bybit? That's a big question. Yes, they are. And all right, 2.24. Got a decent amount of price action. Going back to March of 2022. We are in the 2 hours. That's why I thought it was decent, but we go into the daily. We don't have a lot of price action at all. So does this give us anything? Stretch this out. Obviously, we can't use any of this down here. We have very limited amount of historical price action that we'll be using for this. Let's just go ahead and draw one, and we'll cover Dantian channels next week, but it really makes it so easy to determine where our lows are. So we're going to draw one first based on this absolute low. It's going to act as a support or really just an alert area, not necessarily a support just yet. And then let's draw one through here. Let's move to the 4 hour and see if that works out. All right. Again. Okay, it makes sense through here. Everything is looking good. Nothing is really going to act as a support below this level. So if we do break down below right around $2 flat, psychological support and resistance, we can even bring this down. Well, if we create a new low, if we touch, 201, and we come down below there, actually that's really close. Let's see what that absolute level is again. Again, we're going to use this. We're going to look at that. We're going to go up to the top left, and our low is 2.0126. So right around that level. If it gets close to that, we're most likely going to fall through. Next, as we move higher, we see a lot of slippage through this area. So I don't know if that's going to act perfectly in the future. The alignment was good on the daily, but we only saw like 3 confirmations, or 2 from one side and 1 from the other. 2 from the support side, 1 from the resistance. So what are we looking at? In terms of breakouts, we can just go with our local price action. Again, there's a lot of slippage on this. So it's really pushing through our previous resistances and pushing through our supports for multiple candlesticks, for full candlesticks like we're seeing through here. So that makes it tricky, but we got to go with our best probability and our best odds. Get something through there for resistance. We need to see a nice close, and that does align with our previous price action. Makes a lot of sense to me. Almost a 1, 2, 3. 4 confirmations towards the long side. We see close above that level. Now we can start to measure what is our magnitude from our current price. Some of these previous highs, around 5% for a good first average. That resistance right around 6. Next, we don't have much. Between 12 and right around 19% for the average of the rest of these highs, but none of them really form any type of resistance. 2 of these are tweezers, so this is going to be the actual resistance right on 2.44. There's really not much we get told from here other than this absolute high price, kind of forming an average. So we go with the lower of those 3. That's going to be our absolute high in terms of setting any sell targets, and we want to bring it down below there anyways, right around 2.68. So if you want to set an actual sell target with, the highest that you can kind of go reasonably on this trade, if you would set a very loose stop loss, would be right around 2.66. This is what we're looking at still. We're still looking at that same level for confirmation. We want to keep it tight, though. We don't want to go extreme. We don't want to go all the way up to 266. I'd say we keep it just below, right around here, 6.55. We've got good touches from both sides. We've got a good approach. We hold. We want to stay below there. So for the actual sell target, we're going to stay right through there. And let's remeasure that. 5.54. Close above there, maybe half a percentage point of confirmation, right around a 5% trade. Could be fine as a spot trade or a margin trade. I won because I paid attention to today's lessons very well. I think that's how it goes. Oluwaz, Andy, and AY must have listened really good those first couple weeks. Really well. Pump the Bitcoin. All right, well, that's really all I have for the week. We're getting towards we're going way past this, the time limit for these streams. That's kind of becoming a theme with these. Maybe eventually we'll be doing like 3-hour streams. I can't do that. Not on a Friday. But that's about all I have. I'm going to submit these winners for distribution. So congratulations, Squeaky Clean and Olumide Broski. Thank you guys so much for entering. Thank you so much to everybody for entering. You guys really do have a great chance, especially with, there's like 15 to 20 people entering per giveaway. So a good chance for everybody. That's why you should come back every single week, every single Friday at 4 p.m. UTC. I really appreciate you guys having you guys in here, asking some really good questions, some really good input, and doing those chart analysis requests. So Harmony 1, and I think that's all we have. That was the last request. We'll do Harmony 1 next week, so I'll write that down. Again, if you join the Discord and go to the Crypto Beat channel, this is all under the kind of the Crypto Beat umbrella, these live streams plus our weekly videos. You can go to that channel and submit your chart request, even if you're not watching this live. But yet again, you can check out those Crypto Beat videos that come out on the main Bybit YouTube channel. We're currently producing for season 2, but you can check out the first season, those first 12 episodes on Bybit's YouTube. Just look up Crypto Beat, and we do some really fun stuff and kind of check out practical applications of cryptocurrencies, NFTs, DeFi, everything to do with crypto. Thank you guys so much for joining. I really appreciate it. My name is Brandon with Bybit YouTube, and I'll see you guys for next week's live stream at 4 p.m. UTC. Thanks so much.